Hi, everybody. Welcome to the August 2025 Economic and Market Update presented by Commonwealth Financial Network. My name is Chris Fasciano, and I am Commonwealth's Chief Market Strategist. The market rally continued in July as strong corporate earnings growth and optimism on trade lifted stocks. The S&P 500, Dow Jones Industrial Average, and Nasdaq Composite were all up low single digits for the month. These solid results drove the S&P and Nasdaq to record highs in July. While it was a solid month for U.S. investors, the story was more mixed internationally. Developed international stocks were down in July. Emerging markets, on the other hand, rallied for the third straight month. Fixed income returns were also mixed for the month, as rising long-term yields weighed on bond prices. The Bloomberg Aggregate Bond Index was down modestly in July. However, high-yield bonds ended the month in positive territory. As has been the case for the past couple of months, markets were supported by the continued progress in getting trade deals negotiated in July. While we're still waiting to see the full details, frameworks for deals with the EU and Japan were announced during the month, which was a good sign for investors. With trade war rhetoric cooling, investors' focus turned instead to fundamentals. We're currently in the middle of second quarter earnings season, and so far, companies have shown better than expected results. The average earnings growth for S&P 500 companies stand at 8.6%, which is well above analyst estimates at the start of the earnings season for a modest 4.9% increase. Encouragingly, 9 of the 11 sectors have seen earnings come in above expectations for the quarter, which is a good sign that earnings growth is widespread and not concentrated in a handful of names or sectors. Over the long run, fundamentals drive performance. So continued earnings growth during the quarter was a good sign for investors. The economic updates released during the month were also broadly positive. The first look at GDP growth in the second quarter showed surprisingly strong economic growth. The economy grew at an annualized rate of 3% in the second quarter, which beat expectations and signaled a healthy economic backdrop. Additionally, the June jobs report showed continued modest hiring during the month, with a slight rise in the unemployment rate. Despite the solid fundamentals and positive economic backdrop in July, investors still face risks that should be monitored. Geopolitical risks remain, even though recent conflicts have generally not had a meaningful impact on market returns. While recent clashes have certainly gained global attention, so far, markets have remained resilient. While there has been progress on the trade front during the month, we continue to face a high degree of trade policy uncertainty. The most likely path forward is for further trade deals, but tariffs and their potential impact on the economy remain in the daily headlines. Surprises on these policy issues could certainly serve as a headwind for markets in the months ahead. Overall, things remain in a reasonably good place as we head into August. Market fundamentals are healthy, and the economic backdrop is supportive. While there are risks that investors should keep in mind, and volatility could continue in the near term, over the long term, the expectation is for further growth and market appreciation. That's it for this month's update. I'll be back next month to walk through whatever the markets throw our way. Take care, and thanks as always for watching.